What's going on, guys? This is Day Trader Insight. So in today's video, we're going to talk about SoFi, we're going to talk about Amazon, we're going to talk about Estee Lauder, Celsius, platinum and palladium. Before I get any further in this video, nothing I talk about is financial advice. This is all what I'm doing. It's for entertainment purposes only. You make your own investment decisions. Do not be swayed by anything I do. You do your own thing, right? Moving forward, if you guys have been following my videos, I talk about SoFi and my expectations and how I'm positioning myself. On days like today when I'm working, I like to be hedged a little bit. And I talked about my put hedge in a short video that I made yesterday. And I talked about it in some posts that I made today too. On days when I'm working, I can't make videos during the day, but every so often if there's a position that I'm heavy in or I see something developing on a chart, I'll throw it up in a post to share, what I'm thinking. And so, if you're not looking for my posts, feel free to, know that they're there, right? And that sometimes I will throw some information up there. Anyway, in regards to SoFi, I talked about how I expected SoFi to open below that trend line at about $14 today and to then retest it. And I had talked about how, if it retests it from the downside, it's going to bounce off. But then, if it tests it again, it's likely going to break through, and then it's going to have to test it from the upside, which it did, right? I talked about how, I did that hedge because I'm long. I'm very heavy on SoFi. It's one of my favorite companies, and so I do have over 25,000 shares, right? When I see a scenario like we had today, where there's both a bull case, a bull scenario, and a bear scenario, like opening below that line was bearish, right? When it back tested that line and when it hit that line from the bottom at 14 and bounced off, it was still bearish. When it retested it again, it swayed towards bullish. When it broke through and then back tested it and held it, then it switched to bullish. And so there, if I was day trading that, I would have gotten out of my hedge or reduced my hedge, or at least got rid of the short-term hedge and kept the long-term hedge, right? If you look at my posts, I talked about about my expectation for SoFi. So I do think we continue to push upward in price. I don't know if we'll make it all the way to 15.8. And here's the problem. So many people are looking to exit at 15.8, right? If you were big money, why would you let price get to 15.8 if you know like everybody's going to sell there, right? Let's look at the PE on SoFi. It's getting a little bit rich. I think all of us can agree, if we knew nothing about the stock, we were looking at the financials, even the projected financials, we wouldn't be buying in at $16, $15 a share, right? We just wouldn't be starting a position at $15 a share. Everyone wants to exit at 15.8. Everybody that is looking at the charts and has at least a bit of sense for the short term, before the next earnings, is probably looking to exit at 15.8 and re-enter somewhere lower, right? Everybody, right? So I'm trying to keep that in mind. I do not believe that my put hedge on SoFi has been invalidated, right? The $10 strike, January 2026 put contract is still well above that lower trend line. And I think it will remain there until it punches through and tests from the downside and fails to re-enter. That hedge is still valid, and I will hold that hedge, right? That hedge did not lose a lot of value today. So where I have over 25,000 shares, my shares went up over $12,000 today. I shared this in a post, and the value of my puts only went down by something like $2,500 today, or $2,300, something like that, right? So that hedge was the right move for me going into today, where I knew I was going to be busy. I wasn't going to be able to actively day trade, and there were both of these scenarios playing out, right? I still believe that SoFi is going to creep up in price or go sideways until some event brings it down, right? And I find it, when I think about how many people want to sell at 15.8, I don't know if it's going to get there. I'm positioning myself for the fall before then, right? I am long. There are over 10,000 shares in a no-touch account that I do not play with, but I do typically sell 15,000 share chunk here and there, which would be about 60% of the position. I'll swing it around and buy and sell, make a little bit of money here and there. or I'll just get out of it if things are too rich. But I will say, if we hit $15.8 in the next month, I will sell all 25,000 shares. I do not think, I think SoFi is overvalued at that point, and if I was looking to buy a stake, I wouldn't be buying in there. Now, obviously, if things kept shooting up, I'd be looking to rebuy, but I would not be happy about it, and yeah, that would be tough. That would be a tough scenario. But yeah, I'd exit all of it at 15.8. Anyway, kind of moving on from there. Yeah, so my expectation, I think we see 1470, maybe $15 psychological resistance. More so than looking at the SoFi chart, I'm kind of going to be looking at the $10 put chart and seeing how's that look. Because it really, I mean, SoFi price could keep creeping up, and that put contract could skirt along that line for a little while before the put contract goes up in value and the SoFi price falls. And I think that's really what we're seeing. I think we're seeing short-term options get burned. I think we're seeing the SoFi price has a little bit more to go, but I'm going to be shocked. I am going to be absolutely shocked if that put contract doesn't see a nice bounce and SoFi doesn't fall here soon, right? By here soon, I mean in the next few weeks, right? It doesn't have to be this week or next week. Like I had said earlier, I still see a scenario where we reach $15.8 on SoFi by next Friday, or sometime, a little bit less, a little bit more, right? I think that, again, I think it's a low probability scenario where I think so many people are positioning themselves to sell at 15.8, right? I know you've got all these dreamers buying $17 calls, $20 calls, all this nonsense, right? But that's not how I trade, and that's not how I view things. And I try to view things the way I think, investors with, I don't want to say more capital, but people that are maybe investing a little bit smarter, how they view things, right? And no offense to anybody. I mean, you do you. If you get your home run, it's good for you, right? Anyway, moving on from SoFi, let's talk about Amazon. Amazon had a nice bounce today. Amazon is really, I think it has the most beautiful chart as far as telling us what the market's going to do, right? I don't know what you guys know about waves and price action, Elliott wave theory, all of that. And I might not even get it right, because I know I haven't actually taken a course on any of this crap. I've never studied it, learned it from anybody. I've just been trading for over a decade, and I know how price generally moves, right? And so when you have a low peak, so you go to the high peak, right? So you've gone from a low to a high, and then you come down a little bit. You go up more than the other one. You go down a little bit, and you go up to the highest point. So we call that a 1, 2, 3, 4, 5. 5 is the highest point. Then you see an ABC retracement, right? And I have yet to see a convincing B on Amazon, right? So we had that A retracement down to that support line, right? And you don't always have to see an ABC retracement, but that's generally what you'd expect. Now, the support lines on Amazon, I would hate to see an ABC retracement, because I felt like that 199 support was very strong, and I don't want to break back down into those lower levels, right? But if we were going to have a really well-defined ABC retracement with a buying opportunity that I would enter with leverage, so shorter term call options perhaps, then I would look for a more convincing ABC retracement on Amazon, and I would look for that to be my gauge for the entire market, because the chart is so well defined with its peaks and valleys. So on down to the A valley, and then it's going to go up a little bit to the B peak, which is lower than the 5 peak, and then it's going to go down to a C valley, which is lower than the A valley, right? And that's what I look for as like the perfect golden, the golden scenario, right? And so if we were to get a very well-defined C valley on Amazon, it would be down at about $192, right? And so I am looking for that. Now, again, Amazon does not have to do that. You can have where you get an A, you go up to a B, and then you go down to a C, and the C can even be level with A, right? So, and again, you don't even have to do retracements like this. It all depends on the economic data, the news. We've got NVIDIA earnings coming up. There's so much going on, right? And none of this is an exact science, right? But I'm just saying, if I was going to enter something with leverage, I would wait until that scenario plays out, because that's a very convincing pattern that people like me are looking for to know when to enter with leverage or to enter big, right? Yeah, so 192 on Amazon. Holy crap, would that be a buy, right? Celsius stock. Man, did we have a nice move on Celsius today. I love seeing that. I don't know if you guys saw my other video, but I was talking about how 4 a.m. Yesterday morning, I begin up at 4 a.m. When the market is funny, I get up at 4 a.m. to see what I need to do, right? So 4 a.m. Yesterday morning, I sold almost my whole Nike position, which was good because I got out at about $77 and now it's 73, 74. And then Celsius, I went ahead and bought, I tripled or quadrupled my position in Celsius. I think I quadrupled it at 25.20. Is what I was able to load up on at 4 a.m. So that's up a nice chunk of change, right? And, you know, I don't know, 8%, something, 7-8%. That's not bad, right? Moving on from there, Estee Lauder. Estee Lauder is still not breaking bearish. I do not expect it to break bearish. I expect it to stay outside of that wedge that it's broken out of and to keep trending towards $69 to $72. Some people seem to believe it's going to fill that gap all the way to $80. Great, that sounds awesome. In the short term, I'd probably take the quick, 15% or whatever I'd make and get out at $69 to $72. That's probably what I'm going to do. Moving on from that one, a couple others to talk about. I want to talk about palladium and platinum because I feel like there's a chart set up where palladium and platinum, and I actually bought some today. I was looking at that yesterday, forgot to buy it yesterday, so I did make a position in palladium and platinum today. And that is one, I don't mind holding that for 2-3 years, whatever it takes. I see that rebounding, and I see myself being able to make a nice 60 to 100% on that. Again, I don't know when it will be. I don't really care. The chart tells me it'll happen at some point, right? That was about it for today. Moving on to the rest of the week, Amazon is my gauge, and then SoFi is a large holding for me that I'm trading the most dynamically because of how much it's gone up, right? So my eyes are really going to be glued to SoFi and Amazon in the coming days. I did also want to mention that the 10-year bond yield did not break out of that trend line, so it's bounced back below. So hopefully we'll see that continue to trend down. Yeah, that's about it for this video. Hope you guys made some money today. Good luck the rest of the week. We've got NVIDIA earnings. I got to look at the investment calendar and see what else is on the docket. I know we didn't have anything today, but yeah, I'll try to keep you guys posted as the week progresses.